morning, good morning, good morning. How's everybody doing? Wanted to welcome you to our very first post-COVID in-person class. Right now we're in the training room. We have about 8 bodies in here right now, and I'm very happy that I got lots of you guys on at home and in your offices. Today is a special day for me and for you, okay? So the gentleman that I'm going to introduce, his name is Hank Sorensen, and he is a, how many year team leader? Eight and a half year team leader. He's done lots of other things. I'll let him tell you a little bit about his bio. He's an attorney turned businessman turned, I don't know if you ever did the good stuff with the realtors, but he has done an excellent job analyzing people's businesses, literally from top to bottom, new agents, a couple $1 million producers to $100 million producers. He's credited with bringing over the largest Caldwell Banker agent in the country over to Keller Williams. Hank has done such a great job of growing market centers that he started with a market center in Tampa that was at 100 agents, and before they were done with him, it was over 330 agents. So I was fortunate enough to meet Hank early on, actually before I even became the team leader, and he was very kind and patient with me, and told me that he would be accessible, and probably one of his biggest mistakes, because I don't know that I've stopped ringing his phone since. You guys are privileged because probably what I think is one of his specialties is analyzing people's businesses, breaking them down, and giving them probably the vision or the foresight that they can change their business depending on how they treat their business. So he'll tell you that this is the first step, and he'll probably also make mention to agents that he is, because he's been a team leader for so long, he's run multiple, ALCs. Well, excuse me, you can't go to a Hank Sorensen ALC meeting without your P&L. It's your ticket into the door. And so that's obviously something that we're going to implement here, and we want you guys, everybody, to benefit from that. So your view of how you view your business, hopefully from this day forward, will change. And as far as a person, I can tell you that I got 2 mentors in this business, Mark Dilworth and Hank Sorensen. And I can't be more honored to be partnered with somebody that I am Hank. So I thank Ray Lopez for introducing us. And without any further ado, I'm going to bring Hank up. Come on up, buddy.
So the November of 2014, I think it might have been October of 2014, I came to my ALC meeting. It was October of 2014. I came into my ALC meeting in Tampa, and I said, hey guys, what I want to do is crank up you guys producing your profit and loss statements in order to, as your ticket to get into the ALC meeting. And what we're going to do, I'm not going to, super analyze your businesses. I lie. But I wanted them to also act as more of a check and balance on each other. I wanted Jordan to be able to look at Wheaties, to look at Julia's, P&Ls and say, okay, you guys talk and act as a check and balance on each other. And so I went through this whole diatribe, and I said, does anybody have any questions, comments, concerns, anything like that? Crickets. Nobody said a word. Okay. So December ALC meeting rolls around, and understand I had 9 agents on my ALC. And the top producer was at that time was 17 million on down to about 6, maybe 5 million. Out of 9 people on the ALC, how many do you think? How many P&Ls do you think I got the very first month in December of 2014? After I said in November of 2014 to produce all your P&Ls, how many out of 9 agents? How many P&Ls do you think I got?
2.
It was actually 2. Okay, and I did not let them know in advance the number that I was going to say. So I had a sneaking suspicion what was going on, and Teresa, one of the ALC members who had a prior history in accounting and sales for Xerox on a corporate level, and not only did she keep a profit and loss statement, but she kept a budget. Oh my gosh, what's that? I said, Teresa, hey, can you forward me your profit and loss statement? I'm going to send it to everyone else. And so I sent the other 7 agents Teresa's profit and loss statement. January of 2015 comes. How many profit and loss statements do you think I got out of the 9? All 9. They all looked like Teresa's. okay? And so what that told me was what? None of those other 7 were doing what? They weren't keeping a profit and loss statement because all theirs looked like Teresa's. They didn't know what the heck they were supposed to look like, much less do them, okay? And these were agents that were doing 15, 17 million in my office, okay? So that, at that point, we all met and we started they started analyzing each other's profit and loss statements, and it very quickly, within the next year, I would come in, I would open up the floor for discussion about the profit and loss statements, and it literally got to the point where I would kick back, and for 15 minutes, I wouldn't say a word. I would just literally sit back in my chair and have these agents go at each other with questions and comments and everything. Hey, Joe, I saw that, you know, you were spending $5,000 a month on marketing, and that went away last month. What happened? The agents would ask those questions. And they weren't like giving away trade secrets or anything like that. It wasn't that granular on the level, but if there was a $5,000 spend that was discontinued or a $5,000 spend that was ramped up, do you think the agents would have questions for each other? Yeah, they would. And that's what it was meant to do. So all of a sudden, the game started being elevated. The rising tide raises all boats, sort of thing. And so they all started doing profit and loss statements together. And I told Wiki last night, you know, the #1 Berkshire agent in the state, I recruited her over, her name is Jean Marie Holm, December of 2015, never kept a profit and loss statement in her life. She was doing 17 million. Came over to my office, and she went from being the #1 Berkshire agent in the state by unit count to #5 in my office. Okay, so she's like, oh my gosh, I have work to do. Yeah, you do. So she never kept any numbers, but was making like $400,000 or $500,000 a year. Never kept any numbers. The very first month that she was with us, I said, I need you to put together a profit and loss statement on your business. And she had an admin/broker that worked for her business, and he put it together. Then 2 months later, we were at family reunion. I still remember it, out in Vegas. We were in a Japanese restaurant for about 2.5 hours. I took that entire 2.5 hours to go through a profit and loss statement. In 2.5 hours, we cut $60,000 of expenses from her budget, and we had her fire her sister. Okay, in 2.5 hours. Okay, so the next year, because she just eliminated all of this extraneous stuff that she was doing and spending money on, the next year she jumped from 17 million to 25 million in volume. Okay, and last year she did 30 million in volume. But what was funny was, she came in, never kept a profit and loss statement on her business, put her on the ALC because she's really smart and I wanted her involved in company decisions. A year and a half later, fast forward, we were on a discussion, and to this day I cannot remember what the discussion was about. I wish I could. But we were in the ALC meeting and we were going around the horn and getting everyone's opinions. And Jean Marie Holm, and I quote, says, no, look at my numbers. Okay, I was like, oh snap. This girl was like, a year and a half ago, she didn't know what a profit and loss statement was. And a year and a half later, she's telling me to look at her numbers, okay? So at that point, I was like, oh my gosh, my baby's all grown up. So it's encouraging to leadership. It's encouraging to Wiki. It's encouraging to me when we have agents tell us how their business is doing. At that point, we know our purpose has been served because that's what we're here to do, is to help you guys run a better business, okay? And for some reason, real estate agents, this is the only industry, sales-oriented business that I can think of where the actual numbers of sales, the numbers of business are kind of an afterthought. Every other business tracks its numbers. That's why Salesforce has been kind of successful as a company. The software is used by, I don't know, millions of people to track sales results. And what's the only industry that I'm aware of that doesn't really track sales results? That's us. It's us. So if you take out of today being smarter in your business, then I've served my purpose. The easiest way for you to follow along today is to either have in front of you a legal pad, because you're going to be writing a lot of columns of information, or open an Excel spreadsheet, a brand new Excel spreadsheet. Those are the two best methods of following along with me today. Okay, so how we're going to do today. This is in large part, so all of you are familiar with this book. I know you are. So in the back of this book, there is a balance sheet. Don't worry about that. We're not going to go over a balance sheet today. But on page 349, there is a sample profit and loss report. Okay, Gary put this in the book back in 2004, back when it was published. The issue with this profit and loss report is it goes on for 6 pages, and includes every potential line item, and I get it, he was writing a book. You know, it includes every potential line item that you guys can run into in connection with a business. Unless you're a C on the disc profile, when you look at this profit and loss statement in the back of the book, your brain immediately shuts down, okay? Who in the room knows that they're a strong D? Driver, okay? You would look at this and you go, oh shoot, I got stuff to do. I don't have time, okay? And if you're an I, you can't comprehend this because you gotta go make more friends, okay? Or more people for you to talk to, okay? So, unless you're a strong C, you're not gonna comprehend the profit and loss statement in the back of this book. So what I'm gonna go over today is the bare minimum, the absolute bare minimum as a single agent, and I'm gonna mention it when I mention a few team items on the profit and loss statement from a single agent that I want you to get into. This is the bare minimum that I think that you're gonna need to keep as a profit and loss statement. Now, before I start writing stuff on the board, Hank, I've never done this before. How do I do it? How do I set up the format? How do I do this? On an Excel spreadsheet, we're gonna list all the categories that we're gonna talk about, and this is my personal recommendation to you. A lot of you might have a significant other and or children at home. And what I would say to them is, look, every Sunday night at 7 o'clock, I'm gonna disappear into my home office and I'm gonna close the door and I'm gonna turn off the phone. None of you are allowed to come in because for the next however long it takes, and usually it's only gonna be 30 minutes for you to start out with, and maybe it will eventually get up to an hour, but it's just 30 minutes to an hour once a week, no phone calls. Sunday night, when you're uninterrupted, you're not showing property, hopefully at 7 o'clock at night on a Sunday anyway, hopefully, unless it's Jordan. You're gonna say, look, this is the meantime. And what I want you to do is pull your bank account statement for the past week. Now, how many of you have a PA or LLC set up for your business? Okay, that's what I expected. And so he's gonna fix that and I'll show him how to fix that. So you're going to pull your bank account, mostly personal bank statements, and that's fine because that's where you're running all of the expenses of your business through, and you're putting all the revenues into your personal bank account. It is what it is. Just pull the last week. You can't do this daily because too much goes on in your life and you're just not going to do it daily. You can't do it monthly because it's going to look overwhelming at the end of the month. So if you just put it on your calendar that at 7 o'clock on a Sunday night, you pull the last week of your bank statement, seriously, this will take you no more than 30 minutes. It really won't. You know, I know what you're doing. Is anyone doing more than you? You're doing about 11 million. Anyone in the room doing more than 11 million? Fantastic. It would take you seriously 30 minutes at the tops, okay? And for everyone else, because you got less expenses and less revenues than Jordan does, it's gonna take you a shorter amount of time. This is 30 minutes tops every Sunday night at 7. Anybody have questions about this so far? Yes, sir.
I just want to say to the people listening on Zoom that if you have a question, put it in the chat and Ryan will ask Hank that question so that you guys are making sure that you're getting, your questions answered.
So the first half of this class is going to be, we're going to go over creating that profit and loss statement as simply as humanly possible. The second half is I'm going to talk to you about 2 always and 2 never items in connection with your profit and loss statement. What you should always do with it and what you should never do with it. Okay, so there's going to be 2 items on both sides of the coin. So right now is the first time that you're going to put pen to paper. Okay, so profit and loss statement at its core is just going to be revenue. You don't need to write, if you want to write this down, fine, but this is not the start of your Excel spreadsheet. Profit and loss statement is very simple. P&L. You're going to have revenue minus cost of sale minus expenses is at the end of the day going to equal your profit. That's the simplest profit and loss statement that you're ever going to see. Now, how many insights do you think that you can get on your business from a profit and loss statement that has 3 line items on it? Not very many, right? So that means we're not going to do the profit and loss statement this way. This is a gross oversimplification. And what this sheet is going to do is we're going to detail those revenue and expense items, okay? So I'm going to erase that because that's useless to you, but this is the 3,000-foot view, and now we're going to get into the weeds, okay? So I'll leave that up just so when I get to that point, I'll erase it. Let's talk about revenues. And the key to the profit and loss statement is if you're going to err on one side or the other, you want to start out being overly detailed instead of overly summarized, for lack of a better word. And I'll say that again. With a profit and loss statement, if you're going to err on one side or the other, you want to be more detailed up front than more summarized. And this is how I'll explain it. If I just put, so on your first revenue item, and this is going to be in your first cell up in the very top left of your profit and loss statement, what's the main form of revenues that you're going to bring in on a daily basis? Commissions, right? Okay, we're going to talk about that. Let's talk about commissions. Are there different sides of the deal that you can bring in a commission on? Are you always going to do sales in order to bring a commission in, or can you bring a commission in from other types of business? Referrals, you could do property management, you could do leasing, right? And remember what I said earlier about being more detailed than more over summarized, right? So when we talk about commissions, so this is the first indent, and the second indent is we're going to go listing side income. Because a year from now, if I'm tracking my business year over year, do you think that I want to compare this year versus last year, how much listing side income that I make? Yeah, I might want to do that. In addition, would I like to compare February's listing side income to March's listing side income to April's listing side income? Might I want to look at that? Yes. Okay. Now, if I don't have this listing side income, but I list everything under commissions, how can I get any insights? How can I analyze it? I can't, because it's all summarized, right? That's what I mean by being overly detailed versus overly summarized. Okay. And it's real. If I create the detail here and then later I determine, you know what, I'd rather just have this summarized because I'm not going to get that many insights from it. Later, can I just do a summary of this stuff from a go-forward basis and it doesn't cramp me any? Yes, I can do that. Now reverse that. Here, I'm really overly summarized. Later, I want to start breaking this out. What do I have to do? I got to do a look back in order to break all this stuff out. And then now I got to look back a year. It's not going to work. Okay. So listing side income, you're going to have buyer side income is going to be next. You're going to have leasing fee income, and you're going to have property management income. Okay. That's what I would have as a bare minimum as a single agent. Okay. And when we get to team stuff, I'm going to mention a few team items. Okay. Now, does anybody in the room ever do any BPOs? You get paid from a bank, maybe $75. That's going to happen. So, is a BPO a commission? I would depend. You know, you put 9 agents in a room, you're going to get 10 opinions on this. But I would say a BPO is not a commission. So I would have it not as a strict commission under here. I would have it just directly under commissions. Okay. Now, has anybody in the room ever made $1 in profit share inside of Keller Williams? Okay, fantastic. Is profit share part of the revenue of your business? Say yes. Okay, so we've got profit share. Office policy, help me out on transaction fees. Transaction fees, does the office charge transaction fees?
Yes.
Okay, do you get a portion of the transaction fee or does the office take 100% of it?
We get a portion.
Fantastic, love it. So we've got transaction fees, that is a portion of your income, okay? And then we said it earlier, starts with an R, it's referral fees, okay? So you got referral fees down here. There are more potential sources of revenue that you can make, and as you make them, add another line item, and that's fine. But for right now, this is pretty much what the normal agent is going to be looking at as far as revenue. And I've got you until noon, and the rest of this is expenses. Okay, so I either over budgeted my time or not. Okay, before I move on, does anybody have any question about the revenue side and how you set this up? And then what you're going to do is look in your bank statement and you're going to see, okay, in the past week, because we're doing this every what night?
Okay.
At what time? So you're looking at your bank statement for the past week and you're going to say, okay, I had X amount in listing side income. And look, it may be 0, and that's fine. I had Y amount in buyer side income, and it may be 0, and that's fine. But what's going to happen is if you do this every Sunday night, you're going to get to the end of the month, and a lot of these cells are going to have numbers in them. And if they don't, it's okay. We're gonna get to an actual P&L of a $12 million agent later in the class, and that's the document that was on, that's the document that's on your table. It's an actual $12 million agent that was in my Tampa office, and we'll look at it later. Don't look at it now. Pay attention to me. So as you insert numbers during the course of the weeks, you get to the end of the month and your P&L is already done. Thanks, Nick. You're going to get to the end of the month and your P&L is going to be done because you were working on it every single week. So when you get to that last Sunday in the month, you know, if the month ends on a Tuesday or Wednesday, okay, great. Then Tuesday or Wednesday, we'll just go in and grab the last 3 days, you know. Does anybody have a question on how to put this thing together from the revenue side? Any questions at all? Any questions in the chat? There's something in the chat there.
Ryan, check the chat, please. Okay, thank you.
Okay,
Sometimes there's not.
beautiful.
We get excited.
Good morning.
here. Yeah, we get excited.
Good morning.
We chatter.
Fantastic. Say it again.
We chatter.
We chatter.
You chatter. Cool. God, I already hate this guy.
My brain's like nothing.
Nothing new.
He's not enough eye for me. For the record, I think I'm too much eye for Hank too, but he puts up with me.
Right. Any questions on the revenue side? Seriously, I want you to ask me questions on this. And if you're if you're thinking it, I guarantee you someone else in here is thinking about it too. So I want you to ask the question.
This is probably not totally relevant, but why would you not consider BPO commission? Just out of pure curiosity.
And here's why. And it depends on office policy. Like in my office in Tampa, we didn't take any broker dollar from BPO income.
Okay.
And so I didn't. We acted as a pass through on it.
Right.
And because of that, I just didn't. And this is an issue of semantics, really.
Right.
But my main key, and if you take nothing out of this class today, I want you to hear me. Be consistent. If you do something one way one time, always do it that way. Okay? If you categorize something under advertising and marketing instead of subscriptions, always keep it under advertising and marketing. Do not get wonky with your classification. Well, this year I feel like that's marketing. No. There's no feelings. I don't care about your feelings. Okay? Your feelings have no place in your profit and loss statement. This is the most feeling agnostic thing that you will ever see in your entire life. Okay? So it's totally up to you. You can put BPO under commissions, just please, 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 always put it under commissions. Don't, however you treat something the first time is how you're going to treat something always. Otherwise, when you try to do year over year and month to month comparisons and trending, it's gonna screw up the numbers. Okay? It's just gonna do it. Good question though. Any other questions you've got before we travel on?
Can you read out those titles so people don't seem to have a little trouble reading that?
So this is revenue, commissions, listing side income, buyer side income, listing fee income, property management, BPO, broker price opinions. Occasionally you guys may get a bank that calls you that asks for that. Profit share, transaction fees, referral fees. There may be additional sources of revenue that you get, and that's fine. Go ahead and list them, and it is what it is. This is just the bare minimum that I think as a single agent that you should, you know, this is going to take care of about 97% of the revenue that you're going to face on a daily basis. Anybody got any questions on that? Nothing. Perfectly clear as mud. Okay, fantastic. Now, when I put this up here over on the board, I said revenue minus, and what was the next item? Cost of sale. So the way, and mainly I'm speaking to teams that are either on the Zoom call or in the room. So the way that you want to think of cost of sale is, and this is really the informal definition of cost of sale. Cost of sale is going to be an expense that you incur, and you heard me right. Cost of sale is going to be an expense that the team incurs only in connection with an actual sale being made. And that last phrase is very important, so I'll say it again. It's an expense that is incurred only in connection with an actual sale that is made. like you can pinpoint that expense to that sale. Okay, and the classic cost of sale is always going to be buyer agent commissions. Okay, so you're on Craig's team, yes? So Craig's doing his P&L. I guarantee you that Craig's got a cost of sale, and what he should have, not only buyer agent commissions, but it's not only you, there are multiple buyers agents on that team, right? Okay. There's you. Who else does he have?
Crystal. Dell. Dab.
Okay.
Emily.
What he's gonna do is list out by name each cost of sale. Do you think Craig might want to compare month over month what agents are actually producing income from the team, and therefore what expenses he might have? Okay, now, these are all buyers agents with the team. These are expenses, okay, because this is how much he's paying out to you. Now, before he could pay something out to you, what had to happen over here first? Okay, so on the buyer side income under this, what you're gonna see is on the team, he would have Julia, Crystal, Bell. Now over here, the total commission that came in might be $9 grand. These are just hypothetical numbers, okay? The commission that was brought in from your sale might have been $9 grand. And assume, just hypothetical, 50-50 split, what would he show over here for Julia on a 50-50 split on a cost of sale? There you go, 4,500. Okay? Do you think Craig would want to track buyers agents' revenue and cost of sale over time? Say yes.
Yes.
Okay, he will want to do that for many, many, many reasons that are too numerous for us to even take up time in this class. So that's how the teams would differ, because you would show revenue over here on the buyer side that Julia and Dell and Crystal brought in addition to the payments out to them. Okay? Any questions on cost of sale? Sometimes we'll include referral fees, but usually the broker's going to send you a 1099 that's net of referral fees because the broker already paid out the referral fees. So don't, unless your business is like 75% referrals, and so you really want to track all that information, don't worry about referral fees. If you're Ken Kozik down in Orlando, this year he's going to pay out $750,000 in GCI and referral fees. He tracks referral fees in his cost of sale. But what does he do? Because it's a cost of sale over here on a referral fee, what does he do over here first though? The referral fee right there. He regards the total commission as an income, and then he's got the referral fee out as a cost of sale. Question?
So on the reverse side, when I'm doing a P&L as a person on a team, then I would say that my split, when I'm, giving to Team Dynamo is my cost of sale. Correct?
So you could do it one of two ways. You could either do it gross, like you just said, and do it exactly like you said. You could say, here's how much I'm paying to the team, or you could just look at the income as, this is my net out of the sale, this is my income. Okay? You could do it one of two. You could do it either or two ways. Now's where I'm going to make it. And Jonathan and I had this conversation last night. I love having this conversation. You have a buyer's agent. You are a team leader. You are Jonathan. You are a Craig. Okay. Do you care about how much each individual buyer's agent makes for your team? Is that something you might want to know as a team leader? Would you like to know what agents are making you money and which buyer's agents are costing you money? Would you like to know that? What is the only way that you can know that as a team leader?
You track but how much of their services, the shared services they're using, and remove that from their, take out cost of sale, take out cost of services provided, and that was your net.
This is going to be a profit and loss statement on the entire team. It does have individualized items, but when we go through the expenses, it's just going to be the expense of the team, like the transaction coordinator services the entire team. In a perfect world, what Craig would do is they would have individualized profit and loss statements for each buyer's agent on their team. Okay? So on a separate document, a separate spreadsheet, honestly, it'd be the same screen, it'd be a separate tab down at the bottom. Okay? There would be a separate, and this would be done by an admin on the team, one's familiar with numbers. So on that separate profit and loss statement, we would have how much money Julia brought into the team, okay? And then it would have every expense associated with the team that was attributable to Julia, okay? The big problems though, or the major problem with doing that though, and this is not an excuse, we had this discussion last night, this is not an excuse that says, oh, well, that's hard, so I can't do it. No. The hardest thing for you to do as a team leader, as a Jonathan, as a Craig, is to say, okay, this much of this shared service belongs to Julia. We've got a Zillow subscription that feeds leads to the entire team, and we pay $7,000 a month to Zillow. Hypothetical, okay? Do I allocate, Julia took, and there's 5 buyer's agents on the team, so, I'm gonna split that $7,000 5 ways, and her expense on that Zillow is attributable to her. Or do I look at how many leads that she converted from Zillow that month and closed? And so if 5 leads from Zillow got closed that month and she closed 2 of them, then 40% of that Zillow cost that month gets attributable to her. Okay? However you do it, what's the main thing that I need you to do? And I already mentioned it earlier in the class. Consistency. However you're going to calculate this, you got to do the same thing over and over and over and over and over. Because if you change up your philosophy of recording the numbers, it's going to screw you up later. You've got to do it the same way. The shared services are the hardest thing to allocate when you're doing separate profit and loss statements on each buyer's agent, okay? And Jonathan and I had this talk last night. Let's assume Jonathan's got a 1.4 deal that he's closing. His team's going to close 2 transactions this month. He's got a 1.4 closing that's cash deal that he's going to close. And buyer's agent has a $250,000 deal, it's FHA. How much activity do you think the transaction coordinator is going to give one file versus the other? Do you think a 1.4 cash deal with clean title and no repairs is going to take the TC a long time? Do you think the $250,000 FHA with a laundry list of repairs is going to take some time?
The ship loan. The ship loan.
Let's add in some hard money here, just to make it fun. Okay. Is that going to take the TC a long time?
Yeah.
So in that case, if the transaction coordinator that month makes $3,000 on a salary, is it fair to say, okay, $1,500 of her went toward Jonathan, $1,500 went toward the buyer's agent? No, it's not. You're going to have to do a little bit of touchy-feely here, okay, on that. You're going to have to do a little bit of flexing and squeezing the balloon, and the other end gets bigger. In that case, you might do 1,000 toward Jonathan and 2,000 toward, the FHA loan. I get it, but you have to be fair to your business. You're being fair to yourself. Does that make sense to everyone? Mm-hmm. Okay. So that would be a separate P&L with every buyer's agent on your team.
I just thought of this just for you to think about, because we were talking about, I meditated on that after we talked about it last night. How can we calculate this to where there's a cash conventional government-backed loan,
right?
And what does that timeline look like? And something that my coach and I talked about in the past came back to me, and she was talking about when transaction coordinators on the smaller team are in November, December, January, February, and not doing so much business, they can be doing a little bit more admin-related work.
Yes.
And so something I'm thinking is when we're not so busy, they can do a lot of prepping. So in June, July, August, they're doing 15 deals a month. Whereas in those slow months, they can sit down and go, how many contacts do I make with this buyer's agent, this buyer for this FHA deal? How long do I anticipate I spent on this? And then same for the cash, and then you can start tracking those things in the slow season, and then we can use those numbers to allocate for the remainder of the year. Because we talked about making FHA deal takes 40 hours, commissional takes 30, cash takes 20. We're now going to use that to figure out.
That's our basis. That's our metric of reference.
Correct. And that gets a lot more specific.
However you set up the metrics, beautiful. Okay, if the metrics work for you, and again, this is a soft analysis anyway. This isn't something that but it's something that you've got to track on your business, because if your buyer's agent goes 2 to 3 months in a row with no revenue, you should be paying attention to that long before you create a P&L. Okay. Any question on that before I move on? Okay. So so you got the revenue here, you got the cost of sale, and what's the next item on the profit and loss statement? Expenses, okay? So let's talk about expenses. Get a breath. Here we go. Okay. So we're gonna talk about expenses, and these are, you can group these if you want. In the red book, it does have grouping, all of the, marketing related items, all of the, and okay, that's fine. And you can group them if you want. That's totally up to you. You can create this any way you want. This is half me grouping and half me just, frame of reference on what I think a single agent is going to run into on a pretty consistent basis. If you exist in this office, without question, there are some type of office fees, right? Yes?
Yes, but they're very low.
Okay. You might, if you're renting an office, have some type of rent, okay? I don't, you guys charge rent here on the offices or no?
But it's very low.
Thank you, Jessica.
It's so
It's so low you don't even realize
it's so
you're paying
low
it.
that Wiki's giving away space. Said no one ever. You may also have, in addition to rent, you may have some monthly fee. Okay, some monthly fee just to cover E&O insurance, command, all that sort of stuff. Okay, you guys charge for copies here?
Yes.
Okay.
They sure do.
Says Jonathan Mills.
And color copies are extra on Sunday.
And they are.
Yeah, they are. So, and the reason, and this might seem kind of granular, but the fastest way to find out that your admin is committing fraud and she's running her other business on your nickel is to look at
Give
your
her a
copy
different
expense. Well, you look, yeah, give her a different code, but you look at your copy expense and you go, really? We sold 2 million last month and we've got $647 in copy expense? Are you in a side business on Etsy or what's going on? Is your question. That's how that comes about. So now I'm going to write something now that I never want you to write. Okay? Is I'm going to write the word other or miscellaneous. Okay? I hate that word. I can't stand it. I wrote it so that you never will. I can't stand other and I can't stand miscellaneous business. If we're going to do all this work to track all these numbers, and then seriously, at the very end of the day, you're going to just punt. Okay. I can't find a line item to put it. Give me that receipt and I will find a line item for it. I can tell you what that's going under. Okay. Don't ever write other. Don't ever write miscellaneous. If I see that P&L, seriously, if my agents would come to me with a P&L that had a miscellaneous or other, I would hand it back to them and I would say, try again. Try again. Question?
It was just a formatting on this Excel. I don't know if you've already said this, but I'm trying to, stay with you. So cost of sale and the expenses, are they below the other? Are they shifted to the right? Are they on a different tab?
Good question. This should all go vertical. This should all just keep going down, keep going down, keep going down. I'm only limited by the space here. On a balance sheet, that is some left and right stuff, but I'm not going to go into that today. This is just keep going down, keep going down, keep going down. Okay? Just like this, this one here that's on your desk, okay, that I think Ryan put in the chat.
Yep.
Okay. It goes down, 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 down. Okay, just keep going down.
Is there anything you consider nominal? Like, is there a cutoff point where you're like, that's not like $2.34?
And here's
Like,
why.
would you create a whole line that's gonna stay there permanently for something that 1 month was?
And here's why. When real estate markets go up and when they go down, are you looking to cut every single freaking expense that exists in your business that is not absolutely critical to your business? Okay? $2.34. Am I looking to cut it? Yep, I am. I want to find out where everything goes. And the reason, as you're growing your team, someone is going to screw you. It's going to happen. And the fastest way that you can do that is to create an other or miscellaneous category. That is the first place that they're going to steal money from you from. I'm telling you right now, this is 22 years in real estate talking to you. It's going to happen. And this is the fastest way for you to at least try to keep it to it's going to happen. It's a when, not an if. The way for you to keep it to a minimum is to actually track the number. Okay? Some of you have coaching. I would put coaching. Coaching, consulting, if you're paying a coach or something like that, I would put that on there. We're going to go over this. Does he need to tilt that?
I will.
Okay.
We're moving, people.
Client gifts
Sorry.
or closing gifts. Okay. And that might seem nominal to track, but here's one of the reasons I want you to. There's an agent in the Orlando office, and she's great at sales. By her own admission, not so great at numbers. And I put together a 12-month profit and loss statement. She gave me 12 months of her bank statements. In 48 hours, I turned it around, created a profit and loss statement for her. When I handed her back, I emailed the P&L to her. I said, hey, I'd like to be your client next year. And she said, well, what are you talking about? Your wife is an agent. And I said, yeah, but your closing gift budget is sick. And she's like, how much did I spend? It was a lot, folks. It was a lot. And she's like, she had no idea she was spending that money. I mean, it was like average, like $300 per client. Okay? And I said, that's nuts. That's crazy, right? Give them a hug and a kiss. It's good. So that's why you want to track that, because it can become a major item. We've already seen it. Advertising and marketing, pretty self-explanatory. Now, might you have multiple channels that you're advertising through and marketing through? Yes. Okay. And therefore, what would I necessarily want you to do with each of those individual channels? Break them down. Now, how many of you source, and show of hands, and those of you, on the Zoom call, how many of you source every piece of business and every lead that you have? You know where it comes from, every single one. Okay, that's not all the hands. And that's okay, that's a normal room. That's a normal room. You cannot possibly get calculate a return on investment on your lead generation spend unless you source every single shred of your business. Where you got that lead from? That lead came from Zillow. That lead came from a Facebook ad. That lead came from Realtor.com. That lead was Sphere of Influence. That lead was, a bus bench. That lead was the fall festival that we did last October. You have to be able to say that. You have to, because if you can't say that, then you can never calculate the return on investment on your different lead generation sources or any advertising or marketing that you do. And if you can't calculate the return on investment on your marketing spend, do you have a business or do you have a hobby? You have a hobby. Okay? This is a business. You're running a business. All right? Any sales organization, you have to track you have to lead source. Lead source creates closing source. If you know where the lead came from, then you know where the closing came from.
And this might be a given, but it goes further than that. It's not just, I don't do it by Zillow, I don't do it by all those lead sources. I also look at zip codes. So I know I'm spending 6 different zip codes in Zillow.
Perfect.
Well, I found one recently where I was spending $3,000 a month. And my first month, I got a $720,000 closing for it. So I'm like, heck yeah, and stopped looking at it. 3 months later, I hadn't had a single closing at $9,000, including the first month, that's $12,000. I'm like, wait, I just paid a 50% referral fee
So your
for that $700,000.
So your ROI was sexy in the first month, and
Correct.
over time the ROI
And I cut that, invested that somewhere else, and we're getting a lot more business.
So, and what he's describing is this, is say on advertising and marketing, Jonathan put Zillow down here, and he gets multiple zip codes. So he's got this zip code, this zip code, this zip code. So look, folks, you can break that, there's no end to the number of times you can break this down and make this specific. And if he's spending the kind of money on Zillow that I think he is, in all of these zip codes, when he has a closing and it just says Zillow, but he's buying 3 different zip codes, does he know which zip code that lead came in on? So what good is that information? Why would he even, it wasn't even good for you to track it. You might as well not even track it. Yeah, he knows it came from Zillow, but he doesn't know what zip code. Okay, and are zip codes valued differently?
Yes.
Okay, yeah, Zillow tells me so. Yeah, that one's worth $10.50 a month, and that one's worth $3.60 a month. I wonder which one has a higher price point. Okay, so that's advertising and marketing. Photos, or if you're going to do like Matterport tours or something like that, you can do photos and tours. Those are definitely a legitimate business expense. Do you install your own signs here like they do in Jacksonville, or is it like Tampa where you call somebody to go install your sign or the post?
It's on your own.
Both?
I have my personal, I have a runner, but I don't.
You got a guy.
Service, yeah.
You got a guy.
I got a grandpa.
I would put sign installs, or sometimes I would just call them posts. Okay. And that's to be separated from the cost on your signage. Okay, because, and I know that some of you might do waterfront property and maybe on a lake, so you not only got a sign up front, but you got a big 4x8 or 4x4 in the back, on the lake, right? So you have signs, sign installs, auto expense. Anybody running their car through their business? Yep. So we can break that down. On your auto, you can do gas or mileage, but your accountant's gonna say you can't have both. We can cover you on the gas expense, we can cover you on the mileage expense, but we can't have both, okay? And a couple of these things today, I'll put this up here. This is AYA. And I'm gonna just, if you ask me a question, I'm gonna go like that, and it stands for ask your accountant. Okay? So on the auto, you got gas and mileage, you got parking and tolls, legitimate business expenses. You got repairs and maintenance, again, legitimate business expense. And you got insurance on the vehicle. I do not know, so don't ask me. This is an AYA, parking tickets, speeding tickets. I don't know. I don't know. You gotta ask somebody smarter than me. Okay? Wages. We're gonna talk about, what we're talking about here is wages that you pay yourself as a salary out of business, and you go, well, hold on, I thought I paid myself, that's what I do. So if you're a sole proprietor and you're just paying yourself out of your bank account as you got money in your bank account, your accountant might say, okay, that's fine. But the split second that you create that LLC or PA, which is what your accountant will probably recommend that you do, so you can pay less money in self-employment taxes. And for anybody on the Zoom or in the room that's over about $3 million in sales, which is about $70,000 in income, you should have the LLC or PA created, because at that point, you're gonna start noticing a significant difference in the self-employment taxes that you're paying, or if you have the LLC and PA that you're not paying because you're not a sole proprietor anymore, okay? So with wages, what your accountant might say to you is, look, month over month, I want you to take, and these are just hypothetical numbers, this is an ask your accountant item, is your accountant may say, look, 25% of any commissions that you bring in any month, I want you to pay yourself a salary equivalent to, and this is just hypothetical, 25% of any commissions that you make in a given month. And I want you to pay that to yourself as a salary. And what that means is, when you pay yourself a salary, in connection with any business in America that Uncle Sam knows about, where wages are paid to an employee, what has to happen to Uncle Sam? Gotta get his. He gonna get his. Okay? So you got taxes, and your accountant will go over with you all of the federal income tax, all of the state employment taxes, unemployment taxes, all that. That's a you plus your accountant discussion. That is not a you plus Hank discussion. Okay? And your accountant may need to do the calculations for you the first time through, the second time through, but after about the second time through, you should know the percentages by which the taxes are calculated. And then at the end of every quarter, there's going to be quarterly anticipated taxes that are paid. April 1st, taxes are due for the first quarter. July 1st, taxes are due for the second quarter. And you've got to make what's called estimated tax payments based on what you've earned in the prior quarter. And if you don't do that, there are penalties associated with that. And what you hope to do is get to the end of the year, and there is a surplus. You might have paid a little bit too much, but you're okay with that. I'm always fine with getting a little bit of money back, but what am I not okay with? Paying. I want to pay a lot. I want to pay a lot. Okay? So when you do set up your LLC and PA, and again, this is an ask your attorney, ask your accountant kind of question. This is what I do, though, is you set up your PA, you set up your LLC. I would create at a minimum 2 bank accounts. The first one is your operating account, and that's the account that all of your commission checks get deposited into, every single one. It's the account that all of your expenses come out of. It's the account that you have the debit card on your account. So when you're buying office supplies, when you're paying Zillow, this is the debit card that's hooked up to your operating account, and all of the funds are paid out of there. That's fine. The split second that that commission check gets deposited into your operating account, the split second it goes active, those funds go active in your operating account, take 25% of those funds and put them in your second bank account, which is called your reserve account. So when you go down to your bank and you set up the accounts for your LLC or PA, you tell your banker, I need two accounts, my operating account and my reserve account. And your reserve account is your tax reserve account. 25% of every commission check you get gets put over into that reserve account. That money does not belong to you. You are going to take that money at the end of every quarter and do what with it? Pay your taxes, pay your estimated taxes. So if you get to the end of the year and there's a little bit of a surplus left in that account, congratulations. Go buy yourself an iPod. Okay? If you're deficient a little, that's fine. If I'm deficient a lot, I'm knocking on the door of my accountant saying, where did you screw up? Okay, because you screwed up on some calculation. Now, the numbers on the taxes may change year over year because you may go into a new tax bracket. The state may change the unemployment taxation rates. Okay, so every single year, early January, you need to talk to your accountant and say, what are the calculation on my tax rates? What's the percentages? What do they change to? Okay. Oh, well, you know, Jonathan, you went from, you know, $500,000 to $700,000 last year in income. So now instead of being 35% tax bracket, you're in 38. Okay, great. I need to know. Got to know, because that's the money I'm going to withhold. Okay. Does that make sense to everyone? Okay. Now it's time to ask me questions. Yes, sir.
I got one. So this is information for you as well as a question. When you were on that board, you were talking about team agents and stuff like that. Our market center, so that you can get the makeup, is we're just about 50-50 with respect to agents that are on teams and single agents. I don't know if that's your experience at the multiple market centers.
That's heavy loaded on teams, but that's great.
Right, and that being said, a lot of times we have single agents or we have agents that will leave a team to go start their own, and one of their hesitations is, hey, all this has always been done for me, and I want to know that I am going to make it out there on my own. And so, as you're explaining things, speak to the single agent a little bit with respect to how do I do this, because this has always been done over here.
Yeah, and look, Julia still had to pay taxes as a buyer's agent. If she went out on her own, she still had to pay taxes. Taxes are taxes. She'd have a little bit different, you know, broker dollar obligation to the office as a single agent. But Craig might do all of the number calculations for her, and it's a lot simpler for her to go into her accountant's office as a buyer's agent on the team.
Oh, we had a question from the audience.
Cool. And so Craig may do a lot of the heavy lifting for her initially, and it's a really simple conversation with her accountant because he's got numbers already calculated. Whereas if she's coming to her accountant on her own as a single agent, there might be some more heavy lifting that the accountant's got to do because Craig hasn't done some number calculations for her. Okay, that's about as, without getting into the weeds on and knowing exactly the circumstance, you know.
It's a follow-up question. A single agent who's never been on a team and only is doing this for the first time, you've already talked about setting up the bank account, so that's good. Just keep that in mind because they may not know the steps that they need to take to get started.
Yeah, and it's no different if you're a buyer's agent on a team. Do you still have to pay taxes?
Yes.
Yeah, so you're still going to, yes, you need to be an LLC. Yes, you need to be a PA. The team pays your PA or LLC. The analysis is the same. You're still gonna put money into a reserve account. You still gotta pay quarterly taxes. I don't care who you are. Okay, I think I'm really special, but I still gotta pay taxes.
So the question was, what's the difference between a PA and an LLC?
We got 5 hours. And again, you put 9 accountants in a room, you're gonna get. So the question was, what's the difference between a PA and an LLC? A PA is a professional association, and it's just a different kind of S corp. Okay. An LLC is a limited liability company, and it's just, both of them are fictions created by statute by the Florida legislature. The PAs are going to be governed by 608 of the Florida statutes, and LLCs are going to be governed by Chapter 607. The LLCs are going to be kind of favored because they're going to be a little bit less in self-employment. At least this is what my accountant tells me. Okay. This is not Hank speaking because I'm not an accountant, I'm not your attorney. This is an ask your accountant question. From my experience, my accountants told me the LLC is going to pay a little bit less in self-employment taxes than if your status was a PA. Now, again, you put 9 accountants in a room, you're gonna get 10 opinions on that issue, okay? So that's all I can say about that, all right? But as far as like, what's better for liability purposes, it's all the same. It's all the same. No corporate status exemption from fraud, okay? You go out there and you commit fraud, they're gonna sue you personally. I don't care if you're a PA, an LLC, limited liability partnership, I don't care what you are, okay? Wages and taxes, we beat that to death. We're good, we're cool. How many bank accounts are we gonna set up? What are they gonna be called? Operating and reserve, okay? And when you go to the bank, they're gonna ask for 2 things from you. They're gonna say, we need a copy of your articles of incorporation if you're a PA, articles of organization if you're an LLC, okay? And those are just different terminologies, it's the same damn thing. Okay, the second document that they're gonna need is a copy of your employer identification number letter that you get from the IRS, okay? Because they're gonna wanna know, hey, you're actually, the IRS knows your company exists. If the IRS knows your company exists, they're gonna knock on your door at least once a year and say, hey, you have now earned the privilege of paying us taxes, okay? And so the bank wants to know, and the bank wants to know because they're holding all the money, and what's the first person, what's the first entity that the IRS contacts when your taxes are not paid? Your bank, okay? That's why your bank wants to know that, hey, I've got an EIN, so I gotta pay the taxes, okay? So those are gonna be the 2 documents, and then your banker is gonna say, congratulations, we're gonna set up your 2 bank accounts. So you gotta have your articles of incorporation or articles of organization, and then your EIN letter that the IRS does. My record for setting up an LLC, getting an EIN letter, and doing the RE16 form with FREC, changing Jordan to Jordan, LLC, is 13 minutes, okay? I can do it in 13
Wait,
minutes.
where do you do it?
I've seen me do it.
Well, I want to do it.
It's simple, it's simple. I'll show Wiki and then you guys can come to his office.
Sweet.
Where are we? Now, one thing I don't, so these are gonna be taxes that you're gonna be allocated during the course of the year, every month, based on the income that you earn and everything. So you won't have like a huge quarterly payment unless you're not paying them to begin with. Foreshadowing on the P&L that's on your desk already, okay? So we'll get to that. Wages, officer taxes, virtual assistant. Anybody using a virtual assistant? This is gonna be a 1099 person, not an employee. Now, wages here would include if you had a salaried or hourly assistant on your team, as well as the taxes that you owe to the various governments based on the fact that you now employ an admin, okay? Virtual assistant is gonna be a 1099 person. Healthcare, you can run healthcare through your company. You can do it, it's a legitimate business expense, okay? Continuing ed, you know you gotta have it. It's a legitimate expense of your business. Okay, professional fees. And what I mean by professional fees, do you pay a lawyer every now and then to look at a couple of things on your business? You might do it. Do you pay the accountant every year to help you file the taxes of the business? Yes. Is the accountant a professional? Yes. That is a professional fee. Yes.
So I have another question from the audience about if you have your LLC set up as an S corp, then where you receive your salary from, and if you're accounting on a cash or accrual basis.
Ask their accountant. But that's both of those questions are advanced level, and for both of them, I would defer to whatever their accountant said. Although I will say this, cash versus an accrual basis, cash is recognizing income right now. An accrual basis is recognizing income on a delayed basis. You guys are running a cash basis, a cash business. I can't think of a single reason in the world why you would do something on an accrual basis. Okay, I've only ever seen realtor businesses on a cash basis. Okay, so I will say that on that. This is what I've seen. Okay, I'm not saying that they need to do that because I'm not that person to give that advice. But for both of those questions, I would defer to their accountant. Okay. Continuing ed, professional fees, meals and entertainment. When we get back to normal and we can go out and party in Austin, and Dallas and Vegas and all of those other areas and get back to normal. Now your accountant may tell you only 50%, they may tell you this, only 50% of your meal ticket is expensable in the business because they're assuming, okay, if you're eating, 1/2 of that meal was you, and 1/2 was your client. We're fine with covering the expense of you covering your client, but we're not fine with you covering the expense of you. So your accountant may say, yeah, I can discount 50% of that meal, but what's the nicest steakhouse in Gainesville? Timbers, okay. If all of your meals are at Timbers, okay, and the IRS does an audit, you're gonna have a lot of explaining to do, okay? So be reasonable, be reasonable, be reasonable, okay? Postage, totally legitimate. Every time you've got to send a FedEx package out or whatever. Licenses, for those of you that may be on the Zoom, for those of you that are here and you're new or newer, all of those costs associated with you ramping up on your business, you know, real estate school, FREC fees in order to get licensed with FREC, those are totally expensive. All of those fees were incurred in connection with you getting licensed, okay? So those can be included as an expense of your business. Corporate expense. And by corporate expense, what I mean is this. Every single year, in order for you to keep your PA or LLC active, you have to file what's called a Uniform Business Report with the Florida Secretary of State. If you don't do it by May 1st of every year, they will administratively dissolve your LLC or your PA. And it used to be, back in the day, I'm old enough to remember this, that if you didn't do it timely, there would be a 25% penalty fee. Now it's $400. Okay, so don't miss that date. If April 30th comes and goes and you don't renew your PA or LLC for that Uniform Business Report, you're paying a lot of money. You can do it retroactively. You can pay in like the extra $400 fee plus the $125 that you were supposed to do originally. You can do that on August 1st, and your company will resurrect itself and now be active, but you're $400 poorer. Okay, so that's corporate expenses, what I spend to keep my company valid. And there's no monthly or there's no annual fee through FRAC. Once you set up your company, your initial LLC is done with the RE16 form. It turns you from you to you, LLC. Once you do that once, there's nothing, and that's like $30. Okay. Corporate expense dues. Anybody a member of a realtor association or MLS? Yeah, a few, more than you would care, right? So those I would say were dues. Now subscriptions. Subscriptions are going to be what we were talking. Look, we discussed Zillow up here under advertising and marketing. You could do it, and you know what? You can actually have these two different places for like a Zillow, because Zillow, you could have a banner ad on Zillow for one of your listings, in which case you're paying Zillow advertising fees in order to put your listing in a premier placement, right? They could also be sending you simultaneously buyer leads, and would that be advertising and marketing, or is that more of a subscription basis? That arguably is a subscription. So you might actually have Zillow, because in Zillow, even though they're going to send you one bill and say, hey, pay this lump sum, you can sever those costs out and say, okay, this banner ad was advertising and marketing on one specific listing, and over here was my subscription cost and my buyer leads. Okay? Any questions on subscriptions? You could have Zillow, Realtor.com, Trulia, Homes.com, wherever you're getting leads from. This could also be anybody getting notice of default list because you're soliciting pre-foreclosures. You know, you could be doing that. That could be a subscription if you're doing that on a monthly basis. Anything that you're paying either monthly or quarterly or annually, I would say that like over and over and over, that's a subscription to me. Okay. Advertising and marketing usually varies because one month you may do this ad this way, another month this way, and so those costs may vary. Not always, but sometimes. Okay. So those are subscriptions. That thing that you have attached to your ear all the time, your telephone bill, you can expense that. It's perfectly legitimate. And just because I'm going over here, I want to make sure that thing is getting me.
Yeah.
Okay.
Now, we lose you when you walk over to the other boards.
All right. So I'll finish it. So I'll finish off over here.
Yeah.
Supplies, office supplies, pens, pencils, Post-it notes, all that sort of stuff. Not complex. Any charity or donation, any gifts that you guys are doing, that's fine. You're donating money to a school. Sometimes you may pay money to a fall festival. And again, I need you to be consistent, okay? Fall festival, you may say, well, that's advertising and marketing. Well, it's also at the same time a donation to the PTA of the school. So which one do you want to call it? Make a decision, stick with it. Got to be consistent year over year. I don't care what you charge it, just be consistent. Bank charges, is the bank going to charge you to keep your money there? Usually, yeah. So you might have bank charges on your bank statement. If you have any internet or computer charge, you know, you're paying Verizon, you're paying a Gmail account for storage, you know, something like that. You may have something associated with internet or computer charges. Lock boxes. Usually you're going to spend a little bit of money on lock boxes. We talked about signs. Now, sometimes, remember over here, we had property management as income. Now, so if you've got income as property management, it's a rare agent that does not also have an expense associated with property management. Let me talk about it this way. If you're handling any significant book of business on property management, it will eventually happen that your phone will start blowing up at 11 p.m. at night. It's a number that you don't recognize. 352 area code, right? Mm-hmm. Okay, so your phone starts blowing up and it's a 352, 352, same number 4 times at 11 o'clock. And finally on the 5th time, you're like, who is this? Okay, hey, this is so-and-so. I'm the neighbor across the street from your listing at 123 Main Street. Is water supposed to be coming out from underneath the garage? No. And your client, you know they're skiing in Vail, okay? And so you put on some clothes, rush over to the property, and 97 times out of 100 when this happens, it was the input water hose on the washer, and it broke. This is how it always happens, folks. This is 22 years in real estate talking to you. I've seen this once or twice or 10 times. Okay? What really sucks is when it's a 2-story house and the washer was on the 2nd floor. Okay? That happened. So, we can teach you a little bit about profit and loss, Ray, if you want to come in. So you're going to rush over to the property, turn off the water on the outside as you fumble around with your phone, you know, pitch dark and everything. The neighbor's over, dogs and cats are running, you know, whatever. And your neighbor, you're blowing up their phone in Vail, no answer, no answer, no answer. You're going to call ServPro, and ServPro is going to come out to the property and clean it up. And so you're going to pay ServPro $300, $350. These are friends of yours. You've known them. This is your 4th house that you sold with them. Are you just going to let the water sit there until they finally answer the phone at 8 o'clock the next morning? I'm telling you right now, he's not going to let you do that. Ray's not going to let you do that. And they're going to find a way to get that water out of the house ASAP, okay? So you've got property management income, but you just incurred with ServPro a property management expense, okay? So you can have property management here as an expense. Now, you spend $3 grand or whatever with ServPro, pick a number. You incur that this month, which is February, and then you talk to your client and they send you a check. And the next month in March, you're going to recognize property management income, right? But this is $3,000, that's $3,000. So how much are you taxed at the end of the year on any of that? 0. 3,000 minus 3,000 is what? 0. And how much tax goes on 0 income? 0. Okay? But it's still money that went into and out of your bank account. Are you allowed to ignore it? Say no. Okay, that wasn't that fast. You should be faster on that. Okay, yeah, I'm allowed to ignore crap that comes into and out of my bank account. No, you're not. No, you're not. So it's property management. Utilities. When I say utilities, occasionally when you talk to your accountant may say, well, Jordan, you're using that 10 by 10 room in your house as an office. So what I want you to do is pay rent. I want you, your LLC pays rent to you personally because you own the house. And now your electric bill is $200 a month, but that room takes up 1/10 of your house space. So what will he say to you about the utilities? So he wants you to pay 1/10 of write out 10% of utilities. Okay? They may say that to you. May. That's an ask your accountant item. Okay? Travel. That sort of goes along with where was meals. So you may have travel, and those of you know, meals and entertainment come along with that. And I'm talking about the airfare of the hotel, you know, that took you to mega camp or whatever you went to. And then usually there's one last thing that that I already told you that I don't like and I never want to see on your profit and loss statement. Is that other or miscellaneous? And you usually see that at the very end. Now, there's one additional item, and I promised this agent that I would always do this one line item in every subsequent profit and loss class, because she said it once in a profit and loss class that I did, and nobody could move for like 5 minutes because we were laughing too hard when she said this. She said, well, what's your, Hank, where's your NSR account? And I said, what's an NSR account? And how is it, are we safe space here?
No, we are absolutely G-rated.
Okay, that's fine. This is a making stuff right category, okay? That was her statement. This is a making stuff right. And she didn't say stuff, okay? So she had an NSR account down here. And I said, Katrina, what goes into your NSR account? And she goes, oh, that washer I had to buy last month. The refrigerator I had to buy for my client last month. The fence that I had to repair in order to get this deal closed. And I was like, oh, okay, I get it. There are certain things you find yourself at Home Depot getting a remote for the garage because the seller took it with them to their next house. You know, all that sort of stuff. Where you said earlier, $2.34, you know, do I really have to record that? If you got a 1999 remote at Home Depot, okay, that's fine. I don't want an other miscellaneous because I won't remember what it was, but if I put that under NSR, I will remember what it was. Okay? And I just said that because I promised Katrina that I would forever, on every subsequent profit and loss class, tell you about that category. Okay? Because we were crying for like 5 minutes after she said that. Yes.
I don't know what category it would go in, and you could say it doesn't belong because that doesn't really exist, because it's not income. But my question is, I've got this family member who wanted me to lower my percentage or my commission a little bit. And so because it's my family member, I did it a little bit. What category would that go under?
Well, you would, assuming that you did it like on the HUD, you never realized the income to begin with, you just supplied as a credit on the HUD. So when the money came in as a revenue item, it was already netted out. Okay. In that case, I wouldn't include it. But if there was a gross number, if you included it and then you literally took a check out of, and you did it because he's a party to the transaction.
Right.
If you did it, then you would have to have an expense item of, you know, commission rebate. I would call that a commission rebate if I did it on the gross level instead of net of. Okay. Everybody understand that? Okay. Now, we get to the bottom, and we have what's called operating profit. And you say, and your first response is, but Hank, I thought when we had an income statement, it was called net profit. And I didn't call that net profit, I call that operating profit. Why did I call it operating profit and not net profit? Tell me why. Yes, keep going.
Because you haven't paid yourself bonuses.
No. We've already paid taxes. We've already paid taxes. What I really want to focus on, as far as what I really want to focus on when I look at my profit margin, is my operating profit as a percentage of my revenue. Okay, and I'll take a step back. We're going to try to find one of the important metrics. Say that louder.
How much it actually takes to operate your business?
Say that louder.
How much it takes to operate your business?
Yes, ma'am.
Thank you. I love it. I love it. I love it. I love it. Okay, so I'm going to take that operating profit number, and so for you to find out your operating margin, okay, and what that is a product of is you take your operating profit and you divide it by your revenue. Okay, so let's keep this really simple. Keep it really simple. Your operating profit, let's say at the end of the year you make $300,000 on operating profit. Here's where I need you to pull out the calculators on your phone. So operating profit, let's assume your operating profit every year is, or this year was $300,000. That's that number at the end. So it's $300,000. So that number's gonna go in your numerator. And let's say the revenue you brought in on all these commissions was $1 million. So $1 million is gonna be the revenue that's gonna go in your denominator. So you got 300,000 divided by a million. And what does that come out to? 30%. So your operating margin is 30%. That's an important number. You want to track that. And if you don't, and you always want to use operating profit, because you want to find, I want to find out every month, what did it do? How much profit did I create out of just operating my business this month? That's a real number that I can sort of grab a hold of and say, this is valid. This is a valid number. Now, do you pay taxes to the federal government on your operating profit? Say no. No, you do not. There is a number that you subtract from operating profit to get to the number upon which the IRS now taxes you. Okay? What do we subtract from operating profit to get to that final number?
Cost of sales or expenses?
It starts with a D.
This first one.
Starts with a D. If I own a car, what happens to it over time?
Depreciation.
Love you. Operating profit minus depreciation equals net profit. Okay, so we want this to be as high as possible because that tells us how much money we actually made, right? We want this number to be as low as possible so that the feds don't tax us nothing.
Unless you're buying something.
Unless you're buying something. So people that keep buying really expensive cars that are subject to a lot of depreciation, which are quite frankly really smart business owners, okay? Some of them may be in this room, I'm just saying, okay? They have a lot of depreciation. So if you want to go out and buy a Maserati, I just gave you permission, okay? Because I need you to buy it, because at least there's no depreciation. Okay, Jonathan's just smiling ear to ear. He's like, oh, hell yeah, keep going. So you take the operating profit less your depreciation equals net profit, and this is the number that the feds tax you on down here. Okay? Question? Nope.
No, saying hi.
Oh. So that's how this filters down at the bottom on operating profit, depreciation, and net profit. You are not taxed on this number. You want this number to be as high as possible, this number to be as big as possible, which will produce that number being as low as possible.
Is there anything else we can depreciate other than auto?
Auto equipment, if you're ramping up on some really expensive equipment,
Well, so like if I buy $6,000 in technology, I'm writing it off at the purchase time.
it's capitalized right up front.
That's
It's
what I
not
was
depreciated over time. That's a major, ask your accountant, hey, is there something that I can
Sure.
really depreciate? And now we're getting into some weeds, but I will say this. And you could really do this with expensive cars, but again, I'm leaving this up to your accountant. There's something called a straight line basis of depreciation and something called accelerated depreciation. A straight line basis, the feds, your accountant goes into a book and they say, okay, 2012 Maserati Ghibli, you can depreciate it, over this basis, and here's the useful life. And it's going to be $300 per month that we can take in depreciation. And some assets, they can do what's called accelerated depreciation, where it's not straight 300, 300, 300. They can do 500, 475, 450, 425, 400. But the problem with that is you get to 3 years out and there's nothing left to depreciate. And that's when you're earning all of your money. So you're like, man, I gotta have more depreciation. Let's buy some more expensive cars. Okay. So, and seriously, this is called business strategy. This is why you want to be talking to your accountant. Okay. How often do you talk to your accountant?
Once a month.
Right.
But it's also because he gives me a lot of reports.
Yeah, exactly. The hand giveth, the hand taketh away. So any questions on just the profit and loss statement for right now? Come on.
No, I was gonna say, it's 11:15 right now, to give you a heads up of where we are, and to give everybody else the opportunity to ask the questions now, because he's gonna quickly go into part 2. And let's do this real quick if it's on the right screen. For those of you that are at home, if we had this, somebody came up, Going down the list, so make sure you write it down. Client gets closing. Advertising and marketing, Zillow, photos and tours, sign installs posts, signage, auto, gas and mileage. I have no idea what PT is here. Parking and tolls,
Repairs and maintenance,
repairs and maintenance, insurance, wages, taxes,
virtual assistant.
virtual assistant, healthcare,
Continuing
see,
education.
continuing education, professional fees, meals and entertainment, post,
Postage.
postage, licenses, corporate expenses.
Yep.
Dues,
Subscriptions.
public subs, telephone, supplies, charity and donations, bank charges. I don't know what,
Internet and
Internet and
computers.
computer.
lock boxes,
Property management.
property management, utilities, and here was that equation, travel and MSR. Here's the equation that Hank was talking about. Operating profit minus depreciation equals net profit.
Right.
Okay, that's the summary.
And for a lot of you, you won't have any depreciation because you're not running your auto through your business. You don't have any significant equipment that would be worth depreciating. So your operating profit will essentially be your net profit. Okay, and that's fine. It is what it is. But it's at least worth one question that you ask your accountant. Hey, is there anything I can depreciate? Can I throw my car through the business? You should at least ask the question. Okay? And rely on what your accountant says. Nothing, again, I'm not your lawyer, I'm not your accountant. All right? I'll make that entirely clear. So let's look at this profit and loss statement that was on your desk. Okay? Everyone, and for those of you playing at home, this was put into the chat room by Ryan.
By Ryan, and they can print it at home.
Okay, and you can print this at home. And the easiest way, the way that I want you to set this up from a formatting standpoint is, can I borrow you for a second? Come on up.
Ladies and gentlemen, ladies and gentlemen.
Okay, and so you're gonna put this page and this page under it, and this page right here, and that page under it. So they're gonna look exactly like that. That's how you're gonna do the setup on the pages. Everybody got this?
And
they're numbered too, right?
I believe they are.
They are, on the bottom right.
Yeah. Page 1, page 2, page 3, page 4. Okay? That's how the setup is gonna be. We good?
Good.
Cool.
Backing it out.
Thank you. Everybody clap for Caitlin.
Thank you, Caitlin.
Excellent. Vanna White has got nothing on you, girl.
Hank, what board are you going to stay in front of while you're talking? Are you
I'm
gonna-
gonna stay right here
All right.
for the rest of the day.
Well, then don't be moving.
So this is an actual profit and loss statement from an agent that was doing about 12 million in my office. Her husband ran the books and she went and did the sales. Excellent agent, top shelf agent. I would let her represent me personally on all of my purchases and sales. If for some reason my wife couldn't do it, okay? Excellent agent. But you can look into all of this and you can go, and I just wanted you to go home with an actual example of something, because this may still be a little bit abstract for you, but this is when you actually insert numbers into it. Does this help you guys? Does this make a difference to actually look at and say, okay, these are actual categories of information that were entered in? So she goes out and sells. She's a fantastic agent. She knows she doesn't care about numbers. She can't get far enough away from numbers. She doesn't care about them. All she wants to do is sell, sell, sell. Her husband says, I want to do the contracts and I want to do the numbers, and I can't get far enough away from the clients. It's a marriage made in heaven, okay? So you can look through this and all of the income across, you know, it's pretty self-explanatory on the income. Cost of goods sold, commissions, what month did she pay? So look under cost of goods sold. What month did she first pay a buyer's agent on her team? April 2019. We can see that, right? How much did she pay them? $7,813.75. Good. We're reading it right, okay? So you can go through, there's expense, there's insurance expense, short-term disability, long-term disability, dental and life. She's got home warranty reimbursement. She's got health insurance, and then liability insurance. She's got the liability insurance because if you're doing property management, you want liability insurance, because the split second that someone has that first slip and fall, or God forbid, a death, drowning in a pool, and that happened to our Lakeland office. We had 2 small children, got behind the fence, gone, okay? Yes, we had plenty of liability insurance, okay? Look, bad stuff happens to good people all the time. It happens. But you gotta have that liability insurance. She's got charity, she's got professional services, those are the accountants or lawyers that she may pay. Advertising and promotion, automobile expense, those were her, she combined the car payment and insurance payment into one. She just didn't sever it out. Okay, it is what it is. Client gifts, bank service, continuing ed, dues and subscriptions, auto insurance. Oh, she didn't sever out auto insurance. She separated it out. Or she didn't combine it, she separated it out. Internet expense, lock boxes, M&E, office fees to the office, supplies, postage and delivery. This is starting to sound familiar. This is exactly what we went over, folks, okay? And then we get to, hold on just a second. So you're all looking at that. Do you have any questions about what this is and what it looks like? Any questions at all? I wanted you to have an actual operating document. Go ahead, questions?
So when this is net ordinary income, is that operating profit?
Yes, and she does not, you don't see depreciation there anywhere, right? For whatever reason, she is running the auto through the company, but I think it was a used vehicle that was beyond its depreciated useful life. Like if you're running a car and the car's 7 years old, you know, she might have bought it brand new, and so it's been fully depreciated and there's no more depreciable expense. Okay, question?
Now, can you still depreciate it when you're running mileage? It's either or, right?
Accountant item,
Yeah.
I'll leave it up to
That
them.
might be why.
Could be, could be. Any questions on any of this at all? Okay. Cool. Nothing from the Zoom crowd?
Ryan, any questions in the chat?
Cool. Okay. So the 2 always and 2 nevers of your profit and loss statement. First, before I get into that, I'm going to pass these 2 books around, and I want you guys to take screenshots of them. And Wiki, I'll have Ryan post these pictures of these or the titles in the chat box so that the agents can get these.
Excellent.
And I'm going to pass these around just so you guys can take a screenshot of them, and if you want to order them off of A Books or Amazon or whatever. So, Innovator's Dilemma. This book was written back in the late 90s, early 2000s by a man Clayton Christensen, Harvard Business School, Oxford, all that sort of stuff. And so what he did was he wanted to do a study on, well, he did a study on on several different companies, but the main one he focused on that you're going to see in there is the computer disk drive industry. And you're going, what the heck's that? Everything's in the cloud, Hank. Yeah, there was a time when we had disks. We actually, floppy disks or hard disk or whatever. We actually carried around disks with information on them, and then it went to thumb drive, and now everything's in the cloud. There's no more slots we slide stuff into, but he wanted to do a study on a rapidly evolving business, and in the computer disk drive business, it was born, matured, and died in about 18 months on every separate computer disk drive. And it went from 14 inches to 8 inches to 5 1/4 inches to 3 1/2 inches to 2 1/2 inches, and all that happened in about 15 years. And so you would have these birth, maturity, and death of a company in about 18 months. And what he found was the established companies, they had plenty of cash and everything, but what they were looking to do was always put their money toward what he called sustaining technologies. It was the existing technology, whatever it was, to make it a little bit better, a little bit better, a little bit better. Whereas there were what he calls disruptive technologies. And so now you're like, oh, all these people with disruption. Look, this guy said it 20 years ago. He used the word disruption. So you know, Redfin, go away, Zillow, go away, you know, Clayton used it 20 years ago, shut up, all right? So he would say, when the 3.5 or the, you know, you had the 5.25 inch drives and you had the 3.5 drives, well, the 3.5 drives stored less data on them than the 5.25s. They were smaller. But instead of being sort of a mini computer that would run small offices like this would take a 5.25 disk. If Wiki wanted to have a personal computer at home, does he need all the storage capacity that was required of the entire office? No. But would he like to have a personal computer at home? Yes, he would. So with him, and he's worried about space because he doesn't want a computer at home besides the one in the office, he wants a personal computer, so he wants a little notebook or something that's going to have a 3.5 inch disk. So what the established companies did was they ignored the potential market for this 3.25 or 3.5 inch disk and would say, who would ever want a personal computer at home? Seriously, that's what these companies said, okay? Wrong decision. And so he went through all of these industries. He went through the backhoe industry, a bunch of different industries where the technology was rapidly evolving. And basically the companies would die off because they they would allocate their R&D budget, their research and development budget, towards sustaining technologies versus disruptive technologies. And they knew the disruptive technologies were there, but they totally ignored them because they were focused on the larger margin items that they could sell now instead of the item that was being developed to sell more of later. Okay? So how that translates to your business? Hank, that's great. You told me about computer disk drives and backhoes. How does that help me? Are there different lead generation sources that you get are peppered with on a daily basis? And do those lead generation sources produce different returns? Okay, you might have 3 different lead generation sources. One is 7x, one's 10x, and one's 5x. Okay, at least right now. But the 5x, you can see that the technology in that industry is kind of evolving. 5x could turn into 15x if I just give it a year. Okay, but do you have unlimited money to invest in your lead gen budget? Okay, anybody in here have an unlimited bank account besides Ray? Okay, nobody. Okay, great. So you have to make a decision every day how you're going to allocate a finite amount of money towards your lead to your different avenues of lead generation. You are in the same quandary. Do I invest it in sustaining lead generation categories that I'm already mature on, that I know well, and are producing 7x for me? Or do I take a piece of that and allocate it to the 5x, so it's less of a return now, but I see it evolving, and if I just build out my team, I can create a bigger return on it later. This is, folks, this is exactly what you guys run into on literally a daily basis. If you just analogize this. Now, you can get bogged down in the weeds on this, and the computer, like he goes deep into the computer disk drive industry. Wade through it, just wade through it. Eventually you'll come up from there, and you'll take a nap when you're done. I would highly recommend this book though. 0 to 1, this is the best business book ever. There is no better business book than this one, ever created. Peter Thiel, you might know his name. He was one of the co-founders of this little company called PayPal. Okay, you might have heard of it. He did a series of lectures at Stanford Business School. I think it was back in '06 or something like that. And just the series of lectures he put together in the formation of a book. He asks what valuable business is no one creating and how to build a moat around your business so that basically no one's competing with you, okay? If you ever read, I've read this book like seriously 6 times, and I pick up something new every single time I read it. Unless you're a tree hugger, skip the chapter on green energy and stuff like that. If you are a tree hugger, great, you can read it. All right, I didn't get much out of it. But you can go, seriously, read this book, okay? Just take a screenshot, pass them around, and I am leaving with both of these books.
Yeah, I already put it in the chat and everybody will have access to it.
Okay, you can take a screenshot if you want. I'm leaving with both of those, okay? All right.
Always and never, Frank.
Always and never. So we got 2 always and we got 2 nevers with respect to your profit and loss statement, okay? First one is an always, all right? Always keep a profit and loss statement. Always keep a profit and loss statement. Okay, Hank, great. You told me that for the past hour and a half. Why? Okay. How many of you are, well, let me take a step back. We already talked about profit margin, right? We talked about operating margin, right? Okay, and do we think a higher profit or a higher operating margin is better, or a lower operating margin is better?
Higher.
You want a higher operating margin, right? You want to keep more of the money that comes into your business, right? If you don't keep a profit and loss statement, you can't do that calculation. If you can't do that calculation, how do you know how good of a business you're running? And the answer is you don't. You can't. You can't. You know, like I told you, the price of admission to talk to me, especially with an ALC, is the first thing that you have to produce to me is your profit and loss statement, because I have to see how efficient you are running your business. You don't get a discussion with me until I see what your operating margin is. And now I said that to say this. There was one $17 million agent on my ALC in Tampa, single, no kids. She was taking home $500,000 a year, single, no kids. I want to be her when I grow up, right? 32 years old, $500,000 a year, no kids. 72% operating margin.
Yeah.
72% operating margin. And that's what I did. When I saw it, I was like, oh, the baby.
So how much did she work?
Monday through Friday, she never worked on the weekends. Refused to, and she would always come to every ALC meeting fresh from yoga.
How did she have time for all of those things?
She pushed a lot of stuff to her.
She might be my hero.
To her assistant. Oh, honey, get in line. So she pushed at least a decent amount of stuff to her assistant slash fiance, now husband. Okay. And
every weekend.
He was a personal trainer. I'm kidding you. I'm not kidding you. He was a personal trainer. Okay. So he had a very flexible schedule and he could work on the weekends. And so she would say, I'm going to the beach.
What's her name and her phone number?
So she would say, I'm going to the beach. You're going to go out and you're going to do these showings and I'll see you tonight. Okay. So she had a 72% operating margin. So I sat her down. And there is such a thing as not spending enough on your business. And Ray knows what I'm talking about. When you suck all the money out of your business and you just take every extra dollar of profit after you pay for the Post-it notes and the pencils and the toner, and you like take every dollar out of your business, okay? What are you not doing? You're not growing your business. You're not reinvesting the money in your business in order to generate more lead gen sources, more marketing, more. She had a $17 million business, creating $500,000 in income net, no kids, not married, 32 years old, okay? She's good. So I said, what I'd like you to do is take that operating margin actually down to about 55, reinvest that money in additional leads. And her response was, and I quote, no, because this year I'm making a baby. Okay, and she said, I don't want to grow my business because I'm already as busy as I want to be. And I said, fine, that's fine. Now, but unless we had these numbers, could we even have that discussion? Okay, and that's fine that she responded with that. I'm cool with that because everybody's goals are different. Your goals are different than your goals, different than your goals, different than your goals. And all Wiki and I and Ray are here to do at the end of the day is to help you satisfy and meet your goal. That's all we want to do at the end of the day. If your goal is $4 million in sales, if your goal is $200,000 in income, whatever your goal is, that's all we're here for. I can't help you with making a baby. That's where I draw the line. Okay, but at least I knew the goal. Okay. So you want to, and you have to keep the P&L in order to know your operating margin to find out how efficient of a business you're running. Okay. Now, if the agent is able to talk to me about their operating margin, and usually if they're able to do that, they can also talk to me about their ROI that they're getting on different lead generation sources. You know, one source is 7x, one source is 10x, another one is 7x. Hank, can you help me talk about, can you help me determine, you know, where I should go on different lead generation sources based on this ROI? Folks, that is, if someone sits down and asks me that question, I have all the time in the world. I will clear my calendar in the whole afternoon for that discussion. Hank, I can't find the bathroom key and I don't know my copier code. Yeah, I'm not making time for that discussion in the afternoon. Okay? So if you come to me with an intelligent question with data to back you up, and we can do a complex analysis on your business, folks, I like, if I could just wake up and do nothing but that, that would be the best day in the world, because that's how we can help you grow your business. but we can't help you grow your business unless you've got this, okay? Do you want to die in the chair selling a piece of real estate? Do you want that to be the last thing you do on the face of this planet? No, right? You don't want that, which means that eventually you're going to, it's the R word, what's it called? Retire, okay? And when you retire, do you literally want to come in on a Friday, get done at 5, switch the lights off, and just close down the business and it's done? And nobody ever makes $1 from it again. How attractive is that? It's not, right? The look on your face is great. Oh, hell no. That was the look on her face. So the way that you avoid that and switching the lights off and the business just going away, you're going to want to sell me your business. And so let's assume I'm the purchaser of your business. Let's just assume this hypothetical. What do you think are some of the first things that I'm going to ask you for when I want to buy your business? What's the very first document I'm going to ask you for? I'm going to ask you for your P&L. If you have a balance sheet, then great. I'm going to ask you for a copy of that. I'm going to ask you for a copy of all of your vendor contracts, like everything that you signed with Zillow. Do you have a monthly office lease with the office? Do you have an expense item associated with, maybe Craig's team has some phones. They've got a phone system. He's got a network phone system for his team just due to the size of it. He's paying somebody on a monthly basis in order to service that phone lease. You know, I want to see all of the vendor documents that Craig has to pay on a monthly basis. And that's just where I'm going to start. I'll look at those documents and let you know further what I need to see further from there. Okay? But the very first document I'm going to ask you for is your profit and loss statement if you have any prayer of selling me your business. But if you don't have it, as is property, no seller's property disclosure. Your client value that at full price? No, because do you know exactly what you're buying? No, because you haven't shown me anything, right? It's the same calculus. It's the same calculus. It's no different. Monthly, and this is the first never, so that's the first always. Always keep a P&L, and I told you every reason that you need to keep a P&L. Here's the first never. Never view a P&L in isolation. I'll say that again. Never view a profit and loss statement in isolation. And what I mean by that is this. If I just create a profit and loss statement for the month of October, and I just look at that profit and loss statement, okay, I looked at all the numbers. I made $15,000 last month. Okay, and then I throw this away. And then the next month I come back and I look at it. Okay, this is November. I made $12,000. Okay, and then I throw this away. Am I able to get any insights from my profit and loss statement if I'm just viewing it 1 month at a time? Very limited. Yeah, I can get a snapshot in time as to what my money in the bank account right now is. But if I want to find out trends, if I want to find insights and trends, can I identify those with just looking at 1 month of a P&L? You can't do it. You can't do it. You just can't do it. So you got to keep a rolling 12 months on the profit and loss statement. I would say at a minimum. I would keep a rolling 12 months. So you'll have October, November, December, January, February, just like this agent has right here. You see how she did it every single month. Can I identify trends over time in looking at this? Say yes, because I can see how much money I'm spending, okay? And this is the start. This is not going to tell me everything, but this is going to be a start of me identifying what my return on investment for all of my lead generation sources are. But do I have to first know what income I'm making from each one of those lead generation sources is? Yes, I do. Otherwise, I can't calculate my ROI from my Zillow spend. I gotta find out how much money I made off of Zillow, right? How do I do that without a P&L? I can't do it, right? I would get into the weeds on that, and if there's something that you can't determine from that piece of paper, from that profit and loss statement, I always ask the bookkeeper for what's called supporting documents. And by supporting documents, if there are certain, especially on expenses, and I know Ray has asked for this before from Chris, Ray sees a number on the expense line item for the market center, and he's just unsure as to what the heck, why would the market center be spending $687 on supplies during this month when all of the previous 3 months that have been around the $250 mark? He might ask, hey Chris, can you forward me all of the supporting documentation for that line item for that month. And Chris is gonna email him all of the invoices, all of the receipts for that month. But the only way you can know to start asking those questions is to have the expense line item on the P&L. Otherwise, if you didn't keep it all, well, how would you know anything?
And at Keller, because we're open booking with profit share guys, we have to report all the variances to the regional MCA, to Chris's boss. So when people talk about our profit share and, you know, how do we know that that's truly profit share for everybody and who protects that? Keller Williams in general has a system to make sure that I'm not going out and buying a Lamborghini and you guys are paying